The following is an update and technical analysis on the U.S. equity markets, followed by the S&P 500, the U.S. Tech 100 futures, in which I will additionally deep dive into the biggest components of the NASDAQ within the Magnificent Seven, and additionally some targets we hit on Apple and the NASDAQ US Tech 100 space, with some key developments where support levels were deflected and reflected upon long traders and or bull traders, active day traders that were defending some key price support levels pretty significantly, and where we're headed in the near term. And in the financial landscape of the year 2023, stocks soared, with the S&P 500 yielding an impressive 24%, the NASDAQ 100 boasting a 54% gain, reminiscent of its dot-com era peak in 1999. A remarkable $20 trillion in market capitalization was added globally, primarily in the last 2 months of the year, following a test of unchanged status late in October. Global stocks dominated the gains, while bonds saw higher prices and lower yields. Gold rose, the dollar fell, and oil and natural gas experienced shifts influenced by multi-factors, global factors, and NVIDIA's quarterly earnings sparking excitement within the AI market, fueling the US Tech 100 space on an all-out rip-roaring rally where investors were one of the more memorable 2023 gold rush into the anti-obesity drugs, triggering a surge in biotech pharmaceutical sectors, where they additionally impacted food, beer stocks, completely crashing, where we additionally shorted Weight Watchers off that key catalyst, fundamental catalyst, which was a great double-digit crash to the downside, where 2023 marked a significant comeback after the existential threat moments of 2022 and into the crypto markets. Solana completely hitting a 10-bagger with around 1,000% in gains of the year, while Bitcoin and Ethereum also had substantial gains. The rally in itself drove the entire yield curve lower, notably the 5-year declining by 19 basis points despite earlier highs in October. The Federal Reserve's intervention and willingness to create trillions to support markets raised questions about the real economic state. While the economy faced potential crashes and societal challenges, the stock market continued to hit new highs, emphasizing the potential manipulation of numbers within this complex financial landscape. And upon deep diving into the monthly time frame, the much larger picture within the S&P 500, where I've continued to hype and harp up in previous videos the power of the influence of the long-term portfolio. And here we are looking back since the inception of taking the dollar off the gold standard here in 1971, which then was preceded with a 50% crash in the stock market following a burst of liquidity in an onslaught. And when you grasp the intricacies of monetary debasement and comprehend the true structure and functioning of the financial system, it becomes evident that the system is engineered to trend upward. I believe the October lows of 2022 might have acted as a pivotal trigger, potentially averting with the key deflection and reflection off the 50-month moving average, saving Japan, the yen, and the island from economic downturn, where the significance is accentuated by Japan's holdings and U.S. Treasury debt surpassing even China's, coupled with the substantial impact the NASDAQ has on the Japanese economy. And that would have been the ultimate line in the sand, in my opinion, for triggers, stops, margin calls to go off. And that would have been a potential revisit of the Corona COVID crash lows there. And that would have been a completely different story in what we had seen now, where you have an additional bullish crossover in the moving average convergence, an early indication this Chastix 1033 health is being poured right back in these technical long-term indicators, the oscillator shunning above its zero line threshold. And you could make the possible case of a cup and handle formation, with the handle already being broken out of, going on to march on to re-challenge the 2021 all-time reactionary high. Long traders, bull traders, they want to see a solid monthly candle close infused, move to the upside, only re-challenging, taking out those previous highs on a march upward with no resistance going into the year 2024. Short sellers, bear traders, they want to see a rejection amongst this reactionary high here, potential re-challenging into the daily interval primary top of the concealed trading range and channel on a reflection to revisit and crash down below the trough, to revisit the trough of that previous inflection point, to go on to re-challenge the 50-month moving average. And it would be a pivotal juncture, in fact, taking out the structure and foundation of a potential bullish cup and handle formation, which would be negated. And then you go on, that will be the biggest key turning point if and when we go on to re-challenge the 50-month moving average, with the ultimate line in the sand being a primary reactionary uptrend line off the July 2010 reactionary lows, cuts right through the COVID crash lows, and that will be the ultimate key inflection point. Call it a major recessionary tailwind if and when we were to take that level out, where long traders, bull traders would need to aggressively defend that inflection point to maintain the near-term, longer decade trend of this uptrend line, continue healthier momentum within the longer-term monthly time frame. Zooming you into the US 500 futures here on the daily interval, where I had marked talk about a previous low off this primary reactionary uptrend line, which was the collapse of Silicon Valley Bank and the regional banks, where I had traded the First Republic Bank when it was really collapsing to the downside with huge beta moves in each direction. We caught a pretty good, more than a double-digit move to the upside. Going back upon my timeline in the playlists, FRC was a big move, a huge Reddit, caught a big move off the bottom of that key inflection point, only for it to be reflected just based upon trade ideas. And this has been the key turning point, where the Federal Reserve's funding program involved actions in providing banks with the liquidity that they needed to operate smoothly, where it included activities like buying and or selling government securities to adjust the amount of liquidity within the banking and regional system, influencing interest rates and or offering loans to banks when necessary, where these programs were considered through the mainstream media as non-bailout programs. Well, you pull out the charts and you can see a vastly different story, where the liquidity in loans and the banking term Fed buying program is only churning to the upside, and that was a catalyst where we broke out of the 200-day moving average, back tested it 2 days in a row, and it was off to the races. Everyone margining out, leveraging up there, only to be preceded with a market downturn that followed on a retest of the primary reactionary uptrend line off this concealed primary channel, cuts through a series of wicks and troughs, and that has always been a key major reactionary high and low pivot point for long traders and or short sellers. And what has changed now is potential confirmed RSI divergence. We have nice clean divergent high. We have bearish rising wedge pattern with multiple reactionary lows right across that entire sphere, and that has been rejected. And we have starting within a breakdown process. Let alone, we did not get that solid infused red candle close, but it's as good as a potential beginning stages of potential breakdown, where we could additionally have a counter trend snapback rally right back into the bottom of the primary uptrend line. And the 4820 price resistance I had mentioned in the previous video, my analysis on the stock market, it was geared on a scaling in process for swing short sellers to hone in on and add along in the top of the primary trading range to go on to re-challenge on a great risk-reward ratio back down to the 47.19 price support. And additionally, what is a concealed additional hidden downtrend line cuts through a series of wicks and reactions, call it multi-year price resistance. And that has been a key pivotal inflection point if and when we were to undercut the 47.19 price support going into 2024 to re-challenge that key and pivotal inflection point, which will more than likely be correlated with the 50-day moving average. Taking you to the US Tech 100 space futures off the daily interval. And here we are challenging this primary reactionary uptrend line with a multitude of reactionary lows. And we got that reaction right into Friday's close. We have nice, clean, divergent high, confirmed RSI divergence. We have confirmed bearish crossover in the MACD and the stochastics 1033 as well. So again, the odds are leaning for more downside to come. Long traders, bull traders, they want to defend this key inflection point really at all costs to avert a potential sell signal on a prolonged move to the upside, re-challenging the negative RSI divergence and moving average convergence to take that key inflection amount, burn these levels out with no resistance up above, and a prolonged setup, gearing on a much more fueled short squeeze rally to the upside. Short sellers, bear traders, they want to see a spinal big breakdown there on the Tuesday's open, solid daily candle close up above to go on to re-challenge the 16,447 price support. And additionally, the primary reactionary downtrend line off the 2021 reactionary highs. That has been a key pivotal transitioning point that has been really respected at all costs there. That would be the last line of the target to go on to re-challenge some of these key inflection points, which is a great risk-reward ratio short trade setup to the downside. And upon zooming you in to the US Tech 100 60-minute interval, and I had mentioned in that previous stock market analysis video on the 26th of December 2023, we were trading spot price at 16,881, and I had remained adamant how imperative it was for this minor reactionary uptrend line to be defended heavily by long traders and or bull traders and short sellers. We're anticipating and salivating below the murky waters for a nice clean breakdown sell signal to usher in a potential short trade setup where you continuously had divergences, bearish and negative, confirmed on multiple, all four technical momentum indicators, and expanding on a much larger magnitude and scope of the divergences that only continue to construct and establish could potentially usher in a much larger drop if and when some of these key pivotal inflection points were defended for any active and or day traders, long traders. And here's the update. And upon taking that key inflection point out, which is color coded in gray, minor reactionary uptrend line was deflected upon and or taken out really off a hourly breakdown. We need a back test in it, offering a great risk reward short trade setup to the downside, and the entirety of that trade was good for, call it a 1.19% crash to the downside. And upon reflecting and back testing this key inflection point, active, especially if you're an active and or day trader, defended heavily the 16.76370 price support in correlation of the 382 fibs retracement. Back tested 2 hours in a row there, offering a great day trade risk reward long trade setup to the upside, knocking the 16.861 price resistance really to the button there for 0.6 of a big move to the upside, only to be rejected impulsively to the button right off that key resistance level. And the entirety of that move on a day trade short trade setup to the downside was good for almost 0.4%. Added an inverse parabolic uptrend line with just a plethora of reactionary lows really across the entire sphere there. And that was a breakdown sell signal. Nice, clean, hourly candle close breakdown. Back tested 2 or 3 more hours in a row there. Finally, ultimately taken it out. And here we are, back testing and consolidation with potential bigger moves to come if and when some of these key pivotal inflection points are taken out. Now, if we take and have a counter trend bull-like rally, recover the 236 fibs retracement and the 16.861 0 fibs retracement, and go on to re-challenge and retest the bottom of this inverted parabolic uptrend line, call it around the 16.896 900-ish level, would offer a great risk reward short trade setup to the downside, if not an add-on to your existing position for a great opportunity short trade setup on a much more prolonged move to the downside if and when some of these key inflection points are revisited. Short sellers, bear traders, they want to defend this primary reactionary downtrend line off the 28th of December's reactionary highs there, and that will be the ultimate safeguard if and when we are able to pop this inverted parabolic uptrend line, only to be deflected heavily by short sellers and or bear traders really at all cost. Long traders, bull traders heading into 2024 want to take this level out, put a strong green hourly candle close breakout, buy signal up above, to additionally take that level out, re-challenge these negative and bearish divergences that have been continuing to construct and establish on a much, much larger scale since the beginning of the stages, since the onset of this beginning stages of this short squeeze, where Powell's strategic pivot has triggered a significant and impactful move. Just consider and imagine the power, mere words capable of driving a $20 trillion liquidity surge back into capitalization, where caution is warranted for the potential for substantial leverage and margin calls should not be underestimated, especially when a significant volume surge prompts a rush towards the exits from a classic head and shoulder top. And taking you to underneath the hood within the US Tech 100 space, the #1 market cap company in the world here, off a beautiful, clean, divergent high, huge volume at price indication around this range, where I had mentioned off a rising bearish wedge pattern on a complete beautiful backtest and or reaction, where I had mentioned in that previous video on the stock analysis for a great risk reward short trade setup to the downside, knocking target 1 at 191.79 price support for 2.7% drop, and really to the button, especially if you're an active and or day trader. Nice, clean, almost a full percent move to the upside based upon the 191.79 price support. Short sellers, they want to see a solid breakdown, solid candle close below this key additional major price support level for prolonged move set up on a re-challenging of the 189.21 price support and confluence of the 50 exponential moving average. Within a technical viewpoint of the 191.7980 price support, I believe would gear in key technical dimensional momentum indicator spaces that would be undercutting the zero line thresholds. Upon taking this level out, you will put an expel damage that will be continued to be poured within the daily time frame with already oscillator histogram, solid red candle closes below. Long traders, bull traders, they really need to defend the 191.79 price support. If not, additionally, begin the scaling in process for a bigger bounce here off the 189.21 price support, again, with the moving average support and confluence of that key price support level. Taking you out to the second biggest pillar of the US Tech 100 and Microsoft. And we have a primary reactionary uptrend line off the January, beginning of the crisis lows there. And we have this primary reactionary uptrend line off the January lows with a continuation of backtested and or key defense mechanisms in a key defense of bids that were placed heavily by long traders and or bull traders. And here we are on a potential divergent high. We have negative and bearish divergences really constructed on multiple indicators, increasing the odds for potential move if and when we go on to snap this primary reactionary uptrend line off the October reactionary lows there. Short sellers, bear traders, I want to see a solid final breakdown sell signal. Red candle close below this key inflection point, issuing in a sell signal here within the daily time frame on a prolonged setup down to the 366.06 price support for a 2% crash in confluence of the 50 exponential and 50-day price support. And then additionally, right back down to the much larger major primary reactionary uptrend line in confluence of the 359.50 price support for a 6% crash. And that would be the ultimate line in the sand, biggest key inflection point for any Microsoft holders. On a prolonged setup to re-challenge that key inflection point would, again, need to be defended by long traders and or bull traders heavily at all costs to sustain a multi-year primary price action uptrend that has just continued to construct and establish on all key fronts of one of the biggest pillars to the technical big tech space, taking you to the third largest pillar of the entire NASDAQ 100. And we have a primary reactionary uptrend line off the March regional bank bailout lows there. And that has been really defended heavily at all costs, cutting and deciphering through a minor reactionary uptrend line, which would need to be defended. Make no mistake about it. We have negative and bearish divergences just continuing to construct on a much, much larger scale. A lot more evidence here that momentum is starting to shift, and oscillator histogram printing smaller and smaller green infused candle closes above that zero line threshold near term for a potential re-challenging of its zero line threshold if and when we go on to re-challenge some of this key inflection points. In correlation of the 50 exponential moving average is the primary uptrend line with huge volume at price indication around this range. That it would be the ultimate line in the sand for long traders and or bull traders to defend heavily if and when we go on to revisit that key inflection point. For the bullish case scenario, you potentially have a bullish flag continuation pattern with a flag setup and a measurement of a pull to re-challenge those negative and bearish divergences, which would be good for another 8% move to the upside. And that would potentially go right back up, re-challenge reactionary all-time highs of 2021 going into 2022. And upon taking you out to Amazon, within the daily interval, we are at a key pivotal inflection point that may have been breached with a nice clean divergent high with a bearish rising wedge pattern. We've snapped it, back tested it, and here we are in the beginning stages of a potential breakdown, with that first target being 143.74 price support in confluence of the 50 exponential and 50-day moving average. We have with the potential paradigm shift in the oscillator histogram, the beginning stages there, the 143.74 would be good for another 5.5% drop to the downside. That would be the ultimate key pivotal inflection point that long traders and or bull traders would need to defend heavily at all costs. Call it multi-year price support and resistance with major reactionary highs and lows across the entire sphere there. And if we go on to re-challenge the 143.74 price support, that will put additional damage and potential undercut of some of the zero line thresholds and the technical momentum indicators. Very a telling move if and when we come across. You could additionally make the case for a 147.83 target with major multiple reactionary highs across that board and sphere. And upon taking you out to Tesla on the daily time frame, I believe we are gearing up towards a key pivotal transitioning point with the breakdown earlier sell signal of a clean head and shoulder classic looking top, put in that divergent high. We had a nice clean divergent high, bearish rising wedge pattern, beautiful red candle, solid infused candle close, sell signal. And that has been good for an additional big move to the downside, taking that additional neckline out, completely bouncing right to the button off the 194.50 price support. That was good for additional 34% in gains to the upside. And I believe we are gearing up towards an additional key pivotal transitioning point in confluence of the 50 exponential moving average and this primary reactionary downtrend line off of July 2023 major reactionary highs, where long traders and or bull traders need to defend this key pivotal inflection point, call it around the 243, 242 zone and buying range on a prolonged risk reward setup to re-challenge that major reactionary downtrend line for 9.7% in gains up to the 337 price resistance for 24% in gains. And short sellers, bear traders, they'll be looking for a solid undercut of this primary reactionary uptrend line with a ton of moving average support down below, called an aggressive short trade setup if and when this key transitioning point were to go on a potential backtest and or retest the primary downtrend line down to the 212.64 price support for 10 double-digit 10% crash. Ultimately, on a revisit of the 194.50 for a 17, call it close to 20% crash in confluence of this major reactionary multi-year price resistance off the 2019 summer reactionary lows, cuts right through, which was the big short off of Tesla when we caught this 60% crash. Elon Musk squaring up with the intelligence agency in the Twitter files. That was good for a big drop to the downside. And here we are. And you could make the case, taking away all the lines on a potential massive, huge inverse head and shoulder, though that could be beginning stages with just a vast amount of consolidation. Do not underestimate how quickly things could shift in the other direction based upon that price support level on a prolonged big move to the upside upon taking out the neckline and re-challenging some of these key big price resistance levels up above, and ultimately re-challenging all-time highs. Taking you out to Costco, a company of the consumer defensive sector based upon the 240-minute interval. And I believe we have a breakdown sell signal off this primary reactionary parabolic uptrend line, and that has been completely taken out, back tested, and or retested. And we are additionally taking out the 236 fibs retracement, call it 663.28 price resistance, where we could have a potential back test and or retest, where you could make the case for an additional minor reactionary downtrend line if and when we come across these key pivotal juncture and confluence of the 236 fibs retracement. Make no mistake about it, that is a breakdown, solid sell signal with bearish, beautiful crossovers in the moving average convergence, nice, clean, big divergent high with negative and bearish divergences really constructed on all four technical momentum indicators, only increasing the odds for a much larger drop to come.